Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Tuesday, 27th day of July, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. It also gives you access to the chat box so that you can ask questions and participate in the discussion. On the days you're out of the office, away from your desktop, just point any internet-connected browser to cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds. You just won't have access to the chat box. We also stream live during the show on our YouTube channel. It's very easy to remember, youtube.com/CFRN. Not only do we stream live each day, we archive each daily show. Currently, there are over 1,700 daily live broadcasts archived there for your educational and viewing pleasure. So with that, we'll open with a word of prayer. Heavenly Father, we thank you for your blessings, for your mercy, and for your grace. We thank you for hearing our prayers, feeding us with your word, and encouraging us as we gather together. Take our lives and use us to love and serve you and all people in the power of your Spirit and in the name of Jesus. We are created by your power, redeemed by your love, and strengthened by your Spirit. We give ourselves into your service. May we love you and love others with all of our heart. In Jesus' name we pray. Amen. Amen. Happy Tuesday. I hope it is a happy Tuesday for you, whoever you are and wherever you are. Let me give you the numbers from around the world. These are the cash markets, or the indices as they're called. A little different story than what we had yesterday. Starting here at home, the Dow is down 192 points. NASDAQ is down 293 points. Now that's almost 2%. S&P 500 down 40, almost 1%. And the Russell 2000 also down 40. And for the Russell, that's a drop of almost 2%. In the commodity basket, crude oil down 29 cents, trading 71.62 last. Gold up 40 cents, trading 17.9960 last. Silver, here's a big one, down 74 cents, trading 24.57 last. That's a drop of almost 3%. Now, when silver, the price of silver moves $1, if you're holding an ounce of silver, then you make or lose $1. If you're holding a futures contract on silver, then you make or lose $5,000. That's when the price of silver moves just $1. And today, again, silver is down almost 3%, 74 cents to be exact. In the Asian markets at the close, Nikkei posted a gain of 136 points. Shanghai fell 86. The Hang Seng down 1,105 points. Now that's 2 days back to back that the Hang Seng had a comma in that number. So 2 huge down days for the Hang Seng. Today's drop a little over 4%. In the European markets at the close, FTSE down 29, the DAX down 99, and the CAC down 46. The only green on the screen, it appears, is the Nikkei, which I believe is the 3rd up day in a row. So we've got a mixed day in Asia. We have a red day in the UK. And so far it is a big red Radio Tuesday here in the US of A. So with that, we'll go to Michael and get a recap of everything that happened this morning in the live training room. After that, I'll come back. We'll look at the logic alerts, the concierge trade alerts, and of course, answers to your questions. Just put them in the chat box. Michael, if you're ready, you can take it away. And if you're not ready, then that's okay. I'll grab the recap that Valerie just sent me. I will format it quickly from my screen. Shouldn't take long. Already taking longer than I thought. Okay. Almost ready. Okay. And so close. Alright. Okay, here we go. The recap so far this week for Logic 247. Logic 247 is our around-the-clock Emini alert service. We cover the S&P, the Dow, the Russell, the NQ, also gold, crude, and silver. And every now and then, an occasional other market. These alerts start flowing Sunday night at 6 p.m. Eastern when the global markets open, and they continue flowing around the clock until Friday afternoon at 5 p.m. Eastern when the global markets close. An alert might come at 2 a.m., it might come at 2 p.m. It has nothing to do with the clock, it has everything to do with when opportunity presents itself. So far this week, since Sunday night at 6 p.m. Eastern, we've issued a total of 24 alerts. 3 never triggered. We're still waiting on 6. We've got 15 actionable alerts, of which 20% would have been stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure and a very simple 3-step process that we teach all of our traders. And over the last 156 weeks, which, by the way, that means we're on our 3-year anniversary, over 156 weeks, we've averaged 20% of all logic alerts being stopped out based on that maximum $300 risk profile. Is that you, Michael?
That is me.
Okay, if you're ready, you can take it away.
Let me slide this right over there, and I will be ready now. Let me hit home on that. There we go. Okay.
Okay, I can see your screen.
There you go.
And I can see your charts.
Excellent.
So it's all yours.
Right. Great. All right. Good afternoon, everyone. Today is Tuesday, the 27th day of July, 2021. if you've not taken a free trial with us and you want to, go to the homepage here at cfrn.net. Scroll down to where it says free 5-day trial, no credit card required. Click on that. All right, that will bring you to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Okay. Name, email, you can put your phone number. But tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button and be sent to confirmation link. You must click on that confirmation link. Okay. If you don't click that link, we don't know that you took the free trial. So make sure you click on that link. All right. What we did today, let's go over that. Here we go. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is 27th day of July, 2021. We made 2 ticks in crude, 24 ticks in gold, and we lost 8 on the ES. Put us at plus 160 on the morning session. Today it took 3 minutes and 2 trades to get to the goal for the day. And today is one of those days I wish I would have stopped trading because we took another 30 trades just to get another 60 bucks. Well, I took another 28 trades just to go up 60 bucks. So what that tells you is there was a lot of back and forth today. Yesterday, we were up $1,000 with fewer trades. Anyway, on the month, we're up $11,125 a contract. That's over 17 trading days, averaging $654 per contract for a 2-hour trading day. Now, this month, we're going to end way better than last month. The average this month is now 654, and the average at the end of last month was 478. Way better. Up until today, the days have been pretty good. But anyway, we've gone 142 out of 143 days so far this year, getting our goal for the day. And that puts us at $92,015 on the year. That's 142 days, as I said. We're averaging $647 per contract per 2-hour trading day on the year now, on the year. Now, we want to keep our monthly averages over that so that this number will keep going up and not down. And hopefully we'll manage to do that. So we did take a whole bunch of trades today. I don't know where to start. We'll just start here with gold. That's where we took the most trades. Okay. Now I think I counted all the trades. Out of the 30 trades, 15 of the trades were break even, and out of the 15 trades, 4 of them were stop outs. So it was a rough day trading today. Okay, out of the other 15 that were not stop outs. Out of the other 15 that were not break even, 4 of them we stopped out on. 2 of them right here in gold. We started out right here on gold with a stop out. We're minus 8 ticks. Then we had a break even trade right there. And we picked up 8 ticks right there to get us back to 0. Stopped out there to put us back to minus 8 again. A break even, a break even. Now I missed these 3 nice trades right here. That would have been great to have at that point in the day. Because then we had another break even, another break even. We picked up 4 here that put us at minus 4. Then we had another break even. And then from minus 4, we went to plus 12. So we had 16 on that trade right there. And 2 there to get us to plus 14. Then we didn't end up with anything through this period right here from 11 to about 11, almost 11:25. We didn't end up with anything. We had this nice run up right here, but we didn't get a trade set up for it. And then finally at the end of the session, I put one last trade on and took 10 ticks profit on that. It did open up a little during the break, but it didn't give us any real trade setups. Maybe one momentum short right here that went a couple of ticks into profit. But anyway, we ended with plus 24 on the gold. Crude oil. Now crude and the ES, we had about the same number of trades today. Here we go on crude. Our first trade on crude, we got plus 2. Then we had a plus 1 to get us at 3, then a break even. And then from plus 3, we had plus 6 over here to get us at 9. Then we stopped out on crude to get us back down to plus 1. We had a break even, then a plus 1 to get us to plus 2, and then another break even. So we had a lot of break even trades today. Now, at the end of the session this morning, I was saying this is the pullback area, and this is where it's trying to go down to. It did eventually go down here, but it didn't give you a trade setup to get down there with. And there was really nothing else during the break. So crude was not that easy to trade today either. The ES started off really nice. You can see there's not a lot of trades in there. And those last two were stop outs. But it started off really nice in here. Our first trade on the ES was right here. We picked up 2 ticks on that. And we picked up 6 on the second one. Looking for it to get down to the zone here. It came within a tick of it. I had highlighted that number right there that was showing up for me. This is where we got the goal for the day. Right here. We had 8 ticks total. Then we had a stop out there. A stop out. Not a stop out. A break even and a break even. And a break even. And a break even. And then we had a stop out. This was pretty much a stop out to the tick, and then it went up. And this was just another stop out that went right up into the zone and then went down. So the direction was right. It was just pulling back too deep today. Then it just got totally sideways in here, and all the way up until the end, really. At the end of the session this morning, I was saying look for it to get down to here, this one over here, and it did. It got down there. It wasn't pretty the way that it did it, but it eventually did get down there. And it didn't actually hit the zone. It came close to the zone and turned around. And I really don't see any trades that you could have taken, given where the zone is. Now, you might have had one short right in here. You could have taken a momentum short trade. And that was it. So it was really tough trading today. Now, we do have FOMC tomorrow. So that could be playing into this. All the news that came out today was better than expected. I think. Let me go and check that again one more time. I think it was better than expected. No, it wasn't all better than expected. Hang on. Here it is. Yeah, this was pre-market. We had some bad news come out pre-market. Way worse than expected. Durable goods orders and core durable goods. Way worse than expected. Yeah, the HPMI, the S&P composite, way better than expected. And the Richmond Manufacturing Index and consumer confidence better than expected. So it's a mixed bag. Either way, I think that everything is kind of waiting for the FOMC to come out tomorrow and see what's going to happen with that. All right, so let's go back here to this, and from here we'll just jump here. If you've not taken a free trial with us and you want to, just go to eminitrainingschool.com. On this page, all that we ask for is your name, your email, and you can tell us the biggest training challenge so we can tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. You must click the confirmation link, okay? If you don't click that link, we don't know that you took the free trial. Now, the spreadsheet I just showed you a minute ago, but we'll go back to it. If you're going to read it, you got to read all the CFTC risk disclosures down at the bottom. Today's the 27th day of July. Made 2 in crude, 24 in gold, and we lost 8 on the ES. Put us at plus 160 on the morning. On the month now, we're at $11,125 a contract. That's over 17 trading days, averaging $645 per contract per 2-hour trading day. On the year now, that puts us at $92,015. That's over 142 trading days, averaging $647 per contract per 2-hour trading day. Okay? All right. That's it, guys. With that, if anybody's got any questions for me, you can email me at support@cfrn.net. If you haven't taken a trial with us in a while, you really should. If you haven't been in the room and you're an active partner, you really should. If you're an inactive partner and you want to get into the room, send an email to support@cfrn.net, support@cfrn.net, and let us know. We'll let you in for a couple of days for free. All right. That's it, guys. With that, I can pass it back out to fabulous Phoenix, Arizona. Studio A, overlooking South Mountain, America's largest city park. Here you go, Dwayne.
Alrighty. Recap of the recap.
Today, it took 3 minutes and 2 trades to get to the goal for the day. At that point, we're at $100 a contract.
Good job.
Thank you.
So the S&P dropped 1% from a record, falling for the first time in 6 days. Now, we're in earnings season, and we had some big names reporting yesterday, and I believe we have some more. Well, we've got some big names reporting all week. Tesla just had its most profitable quarter yet, despite supply chain issues complicating car production. The company surpassed Wall Street's expectations and exceeded $1 billion in quarterly profits for the first time. And as a result, stocks finished at record highs yesterday as investors set their sights on big tech's earning reports. The Dow Industrials pushed beyond 35,000 in Monday's record-setting highs as investors prepare for this week's reports from Alphabet, Apple, Microsoft, and Facebook. And it really is important this time because this whole rally that we've seen through the whole pandemic has really been riding on the back of the companies that I just mentioned. Alphabet, Apple, Microsoft, Facebook. You know, if any of these guys drop the balls, it's going to be trouble for the whole market. Now, continually putting in new all-time historic highs day after day after day like we've been doing. Actually, this big red daily candle, while it's not a good thing for investors, for your 401k, for those who consider themselves traders and trade the markets intraday or swing trade the markets, you know, now the market has at least, you know, a couple days, because the markets tend to fall faster than they rise. In fact, you can see it right here. There's the Friday candle, there's the Monday candle, and the Tuesday candle has taken back basically all of the gains from Friday and Monday and puts us back at that little rectangle, which on the way up we had labeled that as potentially good resistance, but we managed to get above it. We closed above it on Thursday, just barely, and then continued on Friday, and then continued Sunday night, Monday, and now today. And the news that we had this morning, Michael, I don't know if you're still there, but some of them came in worse than expected, correct? I think he's on the phone already. Okay, so let me refresh this chart. Yeah, there we go. If you leave your daily chart running, if you leave your charts running around the clock, the daily chart, for whatever reason, in DT Pro anyway, needs to be refreshed because the indicators get a little kinked up. So we had a new all-time historic intraday high yesterday at 44.1675, and then we had a new all-time historic closing high at 44.15. We opened the session last night at 44.1575, and we traded up all of one tick to 44.16, which was the Monday intraday high. And so we opened last night, we go up one tick, and then, well, picture paints 1,000 words, and we're back down to the step line, which we expect to be good support as price drops to it, potentially good support. We're at the 24% Fibonacci retracement of the last leg up. Now the 24% fib of the entire move, that's over here. Looks like roughly 41.37, 36/37. So that's the 24% fib, the shallowest fib retracement of the entire move that began November 2nd. The low was put in October 30th of last year, and then November 2nd began this big rally. And there's, so it, you know, while today, again, for, you know, investors, it looks bad because it's a big red candle. If you put it in proper context of the overall market and the incredible rally that we've had now for quite some time, I mean, this is the shallowest fib retracement. 38 would be way down at 39.60, and a 50% fib retracement would put us down at 38.22. But just based on the last leg, which the low was put in July 19th, but we started rallying before the close, and so this is the day the rally began, July 19th, through the all-time historic intraday high put in yesterday. Puts us at the 24% fib retracement of the last leg up. Now this is on a daily chart, and that's important because you and I, intraday traders, we look at 1 minute charts and 5 minute charts and range charts and 30-minute charts, sort of the way hedge funds and institutions and deep pocket traders look at daily charts, and weekly charts, and monthly charts. But when something happens on a daily chart, such as this, the big guys see it, and so a drop to the 24% fib should be worthy of at least a bounce. Okay, if we pass through this 24% fib without getting much of a bounce, then conditions are definitely bearish. I believe all the earnings that came out yesterday were good or better than expected. So if we pass through the 24% fib, then we're looking at blue and climbing. The official name of that indicator is the CFMA1. I just call it blue and climbing, red and falling. One is bullish, support. The other is bearish, resistance. And so if we pass through the 24% fib, we hit blue and climbing. Now that's potential support. If we pass through blue and climbing, then we're at the 38% fib of the last leg up. Below that is the daily BBC. Now whenever we pull back to the BBC, number one, we expect it to hold. The pullback holds more often than it doesn't. It's simply price reverting to the mean. Price always reverts to the mean. In our case, the mean just happens to be green. We call it the BBC. It stands for bull bear cross. When price is above it, we're bullish. We anticipate higher prices. When price is below it, we're bearish. We anticipate lower prices. Everything I just said is true of the daily chart, but it's also true on any time frame, on any market, as far as the indicators go and how we read them. Price reverts to the mean on a 1 minute chart and on a range chart, just like it does on a daily, a weekly, a monthly. It always comes home. And so whether it's tomorrow or the next day or a week from now, price will come back to the BBC. The pullback holds more often than it doesn't. However, there are occasions where it doesn't hold. The larger the time frame, the more likely it is to hold. But when the pullback doesn't hold, that's what keeps markets flowing. If we never traded through the BBC, we would end up with a stagnant sideways market that would be virtually untradeable. Having this big red candle here, while intraday traders were able to trade it on the downside, as you'll see when we go to the smaller charts, smaller time frame charts. Now, if we do find support here at the 24% fib, we probably have a couple days of some back and forth as we attempt to take out the all-time historic high. If price gets below the BBC, then there's the 50, the 62, and then this would be a 100% retracement. That would get a lot of attention. And we've got three trend lines here that we've been working with for some time. It started out as an ascending price channel. We violated the channel quite a bit, but price kept getting drawn back to this trend line, so we left it on the chart. We've got this trend line overhead. So the purpose of looking at a daily chart before you start trading, whatever market you trade, is to get a high altitude look at where major support and major resistance is. And in this case, you can see the high of today on a smaller time frame chart, but you can't see that it's the all-time historic high on a smaller time frame. So at a glance, we know resistance is ahead overhead. Now, there are, just like there are things that you see on a daily chart you can't see on the smaller time frame, there are things you can see on the smaller time frame that you can't readily see on the daily chart. So we know where resistance is, we know where support is. We don't know what's going to happen next. Nobody does. Now, some people try to convince you they do, and I could say anything, and there's a 50% chance I'm going to be right, because the market can only do three things. Price goes up or price goes down, and for a period of time price goes sideways. But as you can see, there's up, here's a little doji. Okay, there's a day where price kind of just went sideways. Then we got a down day, then an up day, then a down day, then a couple of up days. We are breaking a streak here in the S&P. We had 1, 2, 3, 4, 5 consecutive green sessions. That streak has now been broken, unless the market does some kind of amazing reversal here midday, which I don't anticipate. In fact, things may get pretty subdued as we move into the Fed announcement tomorrow, as Michael mentioned. We've got the Fed announcement tomorrow. And other headlines, Tesla's full self-driving tech is being fooled by the moon, billboards, and Burger King signs. Tesla drivers are posting videos of their cars confusing the moon for a traffic light, or being tricked into stopping at a billboard. A little bit scary, right? If you're going 60 miles an hour. Now, they say I have a video here. Let's see if it plays. The CEO, Elon Musk, has been promising for years now that fully autonomous vehicles are just over the horizon, but his company's full self-driving technology still doesn't live up to its name. And despite Musk's goal to eventually make the system safer than a human driver, it currently fails at things any human driver wouldn't think twice about. For example, one Tesla owner posted a clip to Twitter on Thursday that showed his vehicle mistaking the moon for a traffic light over and over again as he cruised down the highway. I've never driven a Tesla, so I'm assuming it's telling you there's a traffic light, when in fact there is no traffic light. The clip shows a moon that's unusually yellow and low in the sky, so one can see why the car might register it as a yellow light and apply the brakes. Another owner replied with their own video showing the same scenario. A billboard tricked my Tesla.
Okay, so there is the sign, and you can see the car saw the stop sign, it saw the sign, thought it was a stop sign, and completely stopped here in the middle of the road.
His car just stopped in the middle of the road.
Now, it's interesting that the car actually picked up that sign without it being illuminated by a light. That's different than how it was when I went through it a few days ago. It was actually lit up. That time it wasn't.
Okay.
It just shows you how good cameras work at detecting things. So really the only thing that's left to do is just get more.
That the autonomous driving technology, while promising and close, it's not quite here yet. Also, the online menu that you read by scanning a QR code might still be tracking you. I don't know how many of you have ever used those, but some restaurants, instead of handing you a menu, there's a little card, a placard on the table with a QR code, and you scan that with your phone, and then you read the menu on your phone. Half of full-service restaurants in the U.S. now use scannable QR codes, according to the National Restaurant Association. The contactless technology popularized during the pandemic, allows customers to pull up digital menus on their phones and order without a server, a convenience that privacy experts say comes with a potential downside. The New York Times reported on Monday that QR codes have increased businesses' ability to track and analyze customer behavior, with some apps collecting personal data such as order history, emails, and phone numbers. Why is that a problem? Databases created from the data can then be used for marketing promos such as personalized discounts or recommendations, according to the Times. Activities valued for their intrinsically offline nature, such as eating out or grabbing drinks with friends, are now becoming part of an online advertising empire. And let's see what else. Facebook is letting religious groups charge users $9.99 per month for exclusive contact. A U.S. church is using new tools from the social media platform that let it charge for access to specialized content, like messages from the bishop. Oh, and this one, I've been sharing in the Breeze channel the crime tracking app called Citizen. I use it. It's where you, the man in the street, if you see an automobile accident or a robbery in progress or a house on fire, you open your Citizen app and you start shooting video or taking pictures, and then you can add your own commentary, and then that is broadcast live to everyone who has the Citizen app. Well, they've stepped up their game. Oh, I just hit a paywall. Well, paywalls happen. The bottom line is the app is on the market for field team members who would get paid $25 to interview witnesses and report behind police tape in New York City and Los Angeles. So one of the comments I put in the Breeze channel the other day was that if you have this Citizen app, and if you don't have it and you live in a major city, I encourage you to download it just for a short period. Don't get tricked into paying for the full-blown, because the free, they're kind of tricky the way they do it, but the free app works just fine. If you have the Citizen app, an Apple Watch, and a free police scanner from broadcastify.com, you become Dick Tracy. I mean, you got it all. But now, I assume at $25 a pop, there will be those who are motivated to listen to their police scanner free from broadcastify.com. When they hear there's an incident going on, they rush to the scene, pop open the app, and start reporting. And I can't give you more details because it's behind a paywall I don't pay for. So, see if there's any other big news. Oh, yeah, this is bad. Former Senator Barbara Boxer, Democrat from California, was assaulted and robbed in Oakland, California yesterday. Boxer was in the Jack London Square neighborhood when the assailant pushed her in the back, stole her cell phone, and jumped into a waiting car. She's thankful that she was not seriously injured. She's 80 years old. She served in the Senate from 1993 to 2017. She was succeeded by now Vice President Kamala Harris. Before her time in the Senate, Boxer served as a member of the House of Representatives. The early afternoon incident is under investigation, with police officers gathering surveillance footage taken in the area. Well, you know, I don't care what your party affiliation, we don't want to see that happen to anybody. But when you start defunding the police, when you don't support the police, in California now, you can walk into any store and with no money in your pocket and just simply take whatever you want as long as it doesn't exceed $1,000. Now, I'm not sure how they figure out whether what you just stole has a value of $1,000. You know, sir, I need to check your bag. I need to make sure you're not taking more than $1,000 worth of merchandise. but I mean, it's literally a license to steal. I don't know how they expect any business to remain in business. If you are a small business owner, now, large corporations, I guess they can absorb it to some degree. I don't know what it does to their insurance rates, etc. But, you know, Lindsey Graham last night on one of the news shows, he said if you try that in South Carolina, there's a whole different ending to the story. So large corporations with, you know, stores in all states, I guess they can absorb some of what they lose in California because it doesn't happen in the other states. But if you're a small business owner and you've only got one location and people walk into your store and start taking your stuff, I mean, is it the end of small business in California? I'm afraid it might be. California and New York City will mandate vaccines for government employees. Now, the first time I said that, quite a few months ago on this radio program, that the time would come when you would be forced to take the vaccine. I almost kind of didn't believe it myself when I said it, but I kind of did. And here it is. Joe Biden himself last December said we will never officially mandate a vaccine. But there's a restaurant under fire, I think in New York, maybe somewhere else, but they have a sign on their door, no vax, no service. And the owner of the restaurant, the co-owner, defended his policy, saying, hey, it's just like no shirt, no shoes, no service. He goes, well, no shirt, no shoes, no vax. So you actually have to prove you've been vaccinated to get into this restaurant and eat. I wouldn't want to eat there anyway if they have that kind of a policy. But they're being sued, of course, by somebody, I guess, who wants to eat there and doesn't want to get the vaccination. Pfizer and Moderna are going to test vaccine effects on more children. White House maintains travel restrictions as Delta variant spreads. The Biden administration is now recognizing long COVID, which is, I believe, what John had. John, our radio friend, because he's still not 100% back. It's now being recognized as an official disability. Medical groups are calling for mandating vaccinations for all health workers. And Biden announced today the formal end of U.S. combat mission in Iraq by the end of the year. Biden met with the Iraqi Prime Minister in the Oval Office and said that American troops would shift their focus to training and assisting Iraq forces in fighting the Islamic State. Our shared fight against ISIS is critical for the stability of our region, and our counterterrorism cooperation will continue even as we shift to this new phase we're going to be talking about. Several U.S. officials said the 2,500 U.S. troops still in Iraq already were largely concentrating on assisting their Iraqi counterparts. So there you go. That is the news. We'll go to the smaller time frame charts now. If you missed the recap at the beginning of the show, Logic 247 this week so far, our 3-year anniversary, 24 total alerts, 3 never triggered, waiting on 6, 15 actionable alerts, of which 20% would have been stopped out based on not risky more than $300 per contract per trade, less when possible, using simple market structure and our simple 3-step process that we teach all of our traders. Now, there's all kinds of ways to trade the market. Complicated, convoluted, expensive. We decided to go a different direction. Our methodology is pretty simple by comparison. Like I said earlier, price is going to go up, it's going to go down, it's going to go sideways. I don't need an algorithm to tell me that. And if I look at my chart, I can tell if price is going up, going down. I can tell by looking at the chart where the market may potentially run into resistance or support. I can be prepared for that. What I can't do is I can't know what's going to happen next, and nobody can. When God created Adam, he didn't give Adam the ability to change the past or to know the future, and those two things are inextricably linked for eternity. What we can know, even though we can't know with certainty what's going to happen next, we can know what the next high probability thing is. And even though we have that information, 20% of the time, we're at almost 8,000 alerts over the 156 weeks, we know that 20% of the time the market will not do the next high probability thing. Order flow changes midstream. We get into long positions because there's more buying pressure than selling pressure, and vice versa. But 20% of the time, the market simply changes. It swings in the other direction midstream. Now, we only track the first trigger, like in the recap I just showed you. If you go back and look at the ones that were stopped out, there's a high probability that price did come back, trigger a second time, and then actually made it to the target. Not always, but probably about 50% of the time. But when we do the recap, we only are recapping the first trigger. Once an alert triggers, whether it's a logic or a concierge alert, there's a greater probability of the alert triggering multiple times than not triggering multiple times. Along with the logic alerts, which come out around the clock 24/7, we also have our original alert service, the concierge trade alerts. Now, these are published as a static report shortly after the Globex open. Last night it was 25 minutes after the open. Very simple to use. These numbers are good for the entire session. These numbers are based on historic price action. The logic alerts are based on current price action. But even the logic alerts have about a 20-minute buffer built in, minimum 20 minutes, to allow you to get to your computer, study the alert, study the chart, understand why it's a window of opportunity, and then place your trade. Now, in the beginning, you should be trading in your demo account in the simulator until you put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you accomplish that, our 24/20 blueprint gives you the green light to go live with just one contract. You stay with one contract until you increase your account balance by $2,000. Once you do that, then you get the green light to add a second contract. The big difference between the first contract and the second contract is the second contract is paid for with profit you earned in the market. You're building a trading business, and when you get that green light to add a second contract with profit you earned in the market, that's really your first solid sign that you are in fact building a successful, profitable trading business. The blueprint will always notify you when it's time to add an additional contract. You only add one at a time, and you only increase your trade size with profit you earned in the market. It's very important. Makes it difficult to blow up an account that way. Now, I won't say it's impossible to blow up an account using our methodology and strategy, but you'll have to break a lot of rules, okay? If you follow the blueprint, once you go live, if you have 2 consecutive days in a row where you do not reach your goal in 10 trades or less, then the blueprint's going to take you out of the live market and put you back in the simulator in your demo account. That's not a walk of shame. It's a wise business decision, because if you have 2 days back to back where you don't reach your goal, something's amiss. And so we need to get together in a one-on-one mentoring session, or you need to be asking some questions in the live training room in the morning or the workshops on Thursday night. We need to figure out what's up. There may be some part of the methodology and strategy that you didn't quite, grab a hold of. Could be you just hit a rough patch in the market and you didn't know how to handle it. But you want to get that all worked out. Trade a couple days in sim just to get your confidence back. and then go back to your live account, pick up right where you left off. You don't have to start back, with zero all over again. Now the CTAs, as I said, are based on historic price action versus the logic alerts based on current price action. When these are published each night, just go to your charts, put a line in the sand, 44.19, put a line in the sand at 4,400. As price starts trending up towards 44.19, that's bullish. So you'll use what you've learned in the live training room to find opportunities to buy the market, buy the dips. If price starts trending down towards 4,400, you'll look for opportunities to sell the market or short the rallies. Price behaves around a CTA a lot like it behaves around a weekly trading zone. The weekly trading zones, once they're published Monday morning at 6:15 a.m. Eastern, they're carved in stone for the entire week. They do not change. The CTAs, once they're published, they're good for the entire session. Okay? And remember, once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. So, take it everybody's had an opportunity to grab a screenshot that wants to. So, let's go to the S&P. And here we are. The vertical line separates Monday from today, Tuesday. And so the CTA last night, or the ES on the short side, was 4,400. As you can see, I've got two lines on the sand, 44.19, 4,400. The long side at 44.19, never triggered. And this was the opening candle last night at 6 p.m. Eastern. That's the beginning of the Tuesday session, even though it's still Monday night. So price comes down to the weekly trading zone at 4112/13, consolidates for a bit, then drops to the BBC. When price drops to the BBC, we expect it to be good support until proven otherwise. And this is what otherwise looks like. We got below, we now have red and falling overhead, we get a bearish cross, and price consolidates for a number of hours here at the BBC. And then here's the London Open, 3 a.m. Eastern. In one 30-minute candle, we drop from basically 44.05, 44.06, what's the high of that candle? 44.06 and a quarter. We drop down to the weekly trading zone below at 43.91/43.92. So from 4,400 to 92, that's 8 points at $50 a point, $400 per contract traded. When price drops to a weekly trading zone, we expect it to be good support. When price rallies up to a weekly trading zone, we expect it to be good resistance. And as you can see, that's exactly how it played out in both instances here. Once an alert triggers, there's a greater probability of it triggering again than not triggering again, and here it is triggering again. We come down to the zone, find good support. Not only is there a weekly trading zone here, but also a bullish cross. So we've got two reasons to expect the market to find support here. Price gets back above the trigger, triggers a second time, and then we get back above, and here's our third trigger, right down to the target. On every short alert, the final trade to target is always the weekly zone below. On every long alert, the final trade to target is the weekly zone above. So we had an 8-point move, and an 8-point move, an 8-point move, and then we got back above the trigger. We got another 8-point move to the target, but then price kept going. We consolidated here. This was at 10:30 this morning. This is 11 this morning. So we consolidate a bit at this weekly zone, and then we finally take out this low, this bullish cross, and the zone, and we drop to the next weekly trading zone where the market finds support and gets a nice bounce. 4371/4372 is the current weekly zone. All of these are the current weekly zones. I've updated my chart. These zones go out to our members Monday morning, 6:15 a.m. Eastern. We published the zone since December 14th of 2009. So yesterday morning, our traders knew to expect resistance if price rallied up here, and support if it dropped to here, and then if it dropped further, to expect support here. It's a pretty good tool to have in your trading toolbox. We spiked the zone on this candle, but we bounced and closed well above it, and now price looks to be headed back down. It is testing it again. The actual zone is 4371/72, and the low of this candle is 71.75. Okay. Go from the trigger, from the published trigger to the published target, 8 points. Once, twice, 3 times, 4 times. And then this. And of course there's logic alerts in the channel as well. These are the CTAs. Okay, on the Dow, the short CTA was 349.05. $35080, the long side never got triggered. There we go. So here's the open. This is a window of opportunity that we had drawn on the show yesterday, and the price filled it. And then here's the opening candle last night. We come down, we consolidate for a number of hours at the BBC. We get below it, we trigger. The trigger was 349.05. We dropped the target on this one, 34,885. So 20 points, $5 a point, $100 per contract traded. Now this is some wide-ranging consolidation, but we get back above the BBC. Now this bearish cross, which led to a significant move to the downside. When we have a bearish cross that leads to a significant move, when price revisits the area, we expect it to be good resistance. When we have a bullish cross that leads to an extended move, when price revisits that area, we expect it to be good support, at least on the first attempt. And so these are two textbook examples of that concept. Bearish cross, down move, nice retracement. We hit this area where the cross happened, and resistance. Bullish cross, price is coming down. I mean, you got this big red candle, and it just, looks like the bottom's going to fall out. In fact, one would be quite confident that we're going to make it at least to the next weekly trading zone, but we have to overcome this obstacle first. Now, that obstacle sent price back above the trigger, and we triggered again, and then we got back above the trigger, and we triggered again and again. So it looks like we had 1, 2, 3, 4, 5 triggers, 1 alert. Not uncommon, not unusual. That's why I say Once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. So where did the market finally find support? At the weekly trading zone, 34,755/34,760. And this swing low was 34,762. So came within 2 ticks of touching the zone. The price drops to a zone, we expect it to be support. The price moves up to a zone, we expect it to be resistance. In this case, price didn't make it to the zone because it ran into support. And in this case, we ran into this resistance. On the Russell, 2188 was the short CTA. The long side never got triggered. This was the open last night. We came down to the zone, consolidated. It held. We ran up to the BBC, which we expect to be resistance when we pull up to it. And then we trigger. And the target is the weekly zone below. It always is on a short, 2178/79. So that's an 8-point move. I'm sorry, 9. No, 2179 to 2188. 8-point move. At $50 a point, $400 per contract traded. And then we didn't quite make it back to the trigger. We came close. The swing high was 2187.3. Had we gone a few more ticks, it would have been considered an official trigger. Our traders, of course, know how to handle this, and here we go. We're below the BBC. We've got red and falling overhead. We know we have potential support at this low. If we get through that low, then here's the zone, which we expect to be good support. Okay. So from, next, the NQ. Long side never triggered. Short side was 15027. And the short side was 15027. As you can see here, 15027. And the target, of course, the zone below, which is 14,930/931. So on this one, we only got one trigger. So from 15,027 to 14,930. I guess that would be 93 points, if I'm doing the math correctly in my head. If this were 15030, that'd be 100 points. So 97 points at $20 a point. Basically, from here to the published target, it's almost a $2,000 per contract move. But it kept going. Now, only 3 things happen at a weekly zone. The most likely thing is consolidation. That's what you'll see about 75% of the time. Like this. Like this. The second most likely thing is rejection, which you'll see about 20-25% of the time. That's when the 30-minute candle closes and the only thing left touching the zone is the wick. So price got rejected. The third and least likely thing is the slice, although we've seen more slices probably in the last month than we saw in the previous year. But that's the truth about trading. When price slices through a weekly zone, like it did here, what typically happens is once that move runs out of steam, price will retrace to the zone that it sliced through, and then it will continue in the direction of the slice. And that's exactly what this did. One could even argue that it did it up here as well, although I see that more as consolidation. In fact, that's what it is. This is a better example of the slice. Just slice through the zone like it's not even there, and price retraces back to the zone it sliced through, then it continues in the direction of the slice, where it's currently consolidating at the next to the lowest weekly trading zone. We got one more zone below on the NQ, and that's down at 14,607 / 608. Now the published target, of course, the zone. On a short, it's always the zone below. That's the trade to target. And as discussed, this is almost 100 points, 97. So multiply 97 times 20. That's what the market made available per contract traded. Crude oil. No trigger on the long side. 71.32. Did trigger on the short side. This was the open. We came down to the BBC and the weekly trading zone. So here's two reasons why this should be good support. One, it's a zone. When price drops to a zone, we expect support until proven otherwise. When price drops to the BBC, when there's a pullback, the pullback holds more often than it doesn't. This pullback held, and it sent us up to the weekly zone above, where the market found what we expect resistance, as it did here and as it did here. That's a good example of consolidation, rejection, rejection. We didn't quite get up there. And so on the CTA 71.32, we dropped to 71.08. So $240 per contract traded is what the market made available. So we've triggered once. Price is now bouncing. As we approach the step line, the weekly trading zone, red and falling, any one of those things alone we expect to be good resistance. Put them all three together, and it becomes a high probability that the market will find resistance in this area and then give us another trigger to the downside. This zone is 70.95 / 7,100, or $71. The low was 71.08, so we didn't quite make it all the way to the target. For gold, the short side on gold was 17.94. And the swing low was 1792.8. So that's $120 per contract traded. On the long side, which was 1803, triggered once, and we hit 1805, so that's $240 per contract traded. Then we got back below the trigger, made another run up to, so that's $190, and then we did it one more time, $190. 3 triggers on the long side, with 1 trigger on the short side. And last is silver, which had a mighty drop. Short side was 25.16. And the long side was 25.37, which never triggered. Here's the open. We opened right at a weekly zone. We came down to the trigger at 25.16, and it was a penny and a half. 2 pennies is $100. And on this drop, we made it to, we'll call it 25.12. So that's 4 pennies. It's really 4.5 pennies. 2 pennies is $100. So a tiny trigger, another tiny trigger, another one, and then the final one, which did take us to the target, the published target, which was 25. The zone is 2504/2505. So from 16 to 5, that's 11 points, or 11 pennies. And again, 2 pennies, $100. Now it kept going. In fact, it sliced through this zone, it sliced through this zone, and what typically happens on a slice did not happen here. It seems that price has found at least a temporary bottom here at 24.51.5. We've bounced up to red and falling, which potentially will be good resistance. We'll know if the next candle starts printing red. That won't happen for another 13 minutes. If buyers stay committed as we approach the weekly zone, we expect that to be good resistance. And if buyers really press, then as we hit the BBC, we expect that to be good resistance. So we have 3 spots on our chart where we may potentially find resistance. There, there, and there. Now we were down, when I went over the numbers earlier, about 70 cents. Let's see how much silver is down on the day now. Let me refresh my data. Silver currently down 67 cents. A $1 move in the price of silver is worth $5,000. No matter which side of the trade you're on, a $1 move is $5 grand. And we're down 67 cents. So a little better than $2,500 per contract. So we'll be watching silver to see where we do find the resistance. Is it here, here, or here? Now, over the last 156 weeks, we've published almost 8,000 alerts. The exact number I have right here. The last alert published today happened to be a silver alert, and it was alert number 7,896. Every one of those is a trend trade. Now, we're not anti-counter trend trades. I just feel that a trend trade has a higher probability of reaching its target than a counter trend trade. Now, some people, some funds, specialize in counter trend trading. Now, we define trend. There's many ways to define trend. Are you talking on a daily chart, a weekly chart, an hourly chart? We define trend on a 30-minute chart and where price is relative to the BBC. So the trend is down because price is below the BBC. So I would only put alerts to be short the market on silver, like this one, 24.54 to 24.52. That's the initial target, that's the second target, that's the final trade to target. Okay. That's a trend trade based off the 30-minute chart. A counter trend trade would be if I said, I think price is going to pull all the way up to the weekly trading zone. So if I were to go long, say 2470 to 2480, that's a legitimate trade, but it's a counter trend trade. And so of all 7,896 alerts in the channel over the last 3 years, every one of those is defined as a trend trade. If I also did counter trend trades, we'd have twice as many. Instead of 7,800, we'd have closer to 16,000. Okay. Now again, nothing wrong with a counter trend trade. You just need to be aware. Now, relative to the time frame, okay, on a 30-minute chart, the trend is down. But if I went to a much larger time frame, I could find a time frame where the trend is actually up. So I'm just making sure that you understand all alerts are based off a 30-minute chart. In the live training room, everything is based off a 4-tick range chart. Now that's not a 4-tick chart, that would be too fast. A range chart just simply means that every candle on that chart is exactly 4 ticks tall. And you can change it, you can make it 6 ticks, 8 ticks, 10 ticks, whatever size you're comfortable with. But in the live training room, use a 4-tick range chart, and the stop is 8 ticks on every market, on every trade, across the board. Michael and Valerie are teaching you the methodology, the strategy. They're teaching you the importance of always having a hard stop in place. So to keep things simple in the learning process, we just use an 8-tick hard stop on everything. Okay? But as you start to trade the alerts, we'll teach you how to use market structure so that you know where, based on what the chart's telling you, where the stop loss needs to be. It's a 3-step process. If step 1 requires more than $300 of risk, you go to step 2. If step 2 requires more than $300 of risk, you go to step 3. If step 3 requires more than $300 of risk, then you just wait for that alert to trigger again, or go look at a different market, different alert. Now, lots of people say well, I just trade the S&P. Why is that? Different people have different answers, and there's nothing wrong with just trading the S&P. But our methodology and our strategy works the same on the Dow, the Russell, the NQ, crude, gold. Everything we teach is fluid across all markets and all time frames. Now, some people will tell you it's not possible to trade all markets the same way because they have different personalities. I don't disagree with that at all. I'm sure they do have different personalities. But we're not looking to get into a relationship. We're just looking for a high probability, low risk opportunity to take some profit out of the market. Price flows on the S&P the same way it does on crude. From support to resistance, back to support, back to resistance, back to support, over and over, again and again. It's a never-ending cycle. Price also flows on a monthly chart the same way it does on a 1-minute chart. From support to resistance, back to support, over and over, again and again. Once you can get a hold of that and understand that this is a business based on probabilities, now all you need is a definable edge, and a definable edge is something better than a coin flip. And based on the spreadsheet results that Michael showed you this morning, as he shows you every day about the live training room, I would say those results are definitely better than a coin flip. And on the logic alerts, over almost 8,000 alerts, 20% were stopped out based on a $300 risk profile, maximum $300 risk profile. So that's a little better than a coin flip. Once you have a definable edge, now you just need the discipline to apply your edge whenever it presents itself. Mark Douglas defined trading perfection as this: knowing what to do, when to do it, and then doing it. Trading's not easy, but it can be that simple. And there's something about our brain that has a hard time letting it be that simple. Okay. One last look at the daily chart. We've pulled down into that rectangle. Okay. As we trade through that rectangle, blue and climbing is currently at 4360/61. And on our 30-minute chart, it looks like, see, we hit the zone, we spiked the zone, gave us a nice bounce. This time, we traded through it. The next zone below is at 4346/47, and then the lowest zone for the week, this week on the S&P, is 4303/4304. Now, if we look over here, this bullish cross, which led to a very extended move to the upside, has never been retested. And so, based on that, if price continues down on the way to the next zone, price is always trying to get to a zone. If it's above the BBC, it's trying to get to the zone overhead. If it's below the BBC, it's trying to get to the zone below. Okay. If price continues down, trying to get to this zone at 46/47, you should expect at about 4354/55, there should be some support there. Now, will it be enough support to reverse the market? I don't know. Will it most likely be good enough for a decent bounce? It typically is. So if you're trading the S&P today and price continues lower, enjoy the ride down, okay? But just pay attention at 4354/55. If we get below that area and then price pulls up a little bit and then continues down, then you've got a great window of opportunity down to that zone. And you've got a nice window of opportunity right here. It's the S&P. The Dow, your window of opportunity at the moment is right there. On the Russell, have a very slender window of opportunity from 62 down to 60. On crude, window of opportunity right here, which could easily continue on down to the zone. And we're up against red and falling. We're up against the weekly zone. See, over here we had blue and climbing. So price just ran right up there, pretty as you please. But now price has some obstacles like red and falling. So if we can overcome red and falling, then there's a window of opportunity before you get to the trigger, 1801 up to 1802. Then you got the trigger at 1803. If price fails to overcome red and falling, then on the short side, got a window of opportunity there. That low could be support. If price travels through that support, then it's on down to the trigger. And if it gets through the trigger, then you got a nice window of opportunity down to the zone. Silver, if we take out that low, big window. On the NQ, big window. And on the S&P, watch 4360/61. 4360 / yeah, we need to note that. Daily BBC. $43.61 / 43.62. Is that right? I'm sorry, not the daily BBC, but Blue and Climbing. 60/61. $43.60/43.61. Right there. So that's potential support right in the middle of that window of opportunity. And then the daily BBC, actually we got a 38% fib at 43.43. And then the daily BBC is at 34. So 43.43, that's important. Daily, 38% fib. Of the last leg up. And the BBC is at 43.35. Just got a new 30-minute candle. Okay. The daily BBC. Now, those numbers could become important in today's session. Although we're down considerably. Price seems to have found some support at this area right here. If we bounce up to the zone, we expect that to be resistance and then a continuation of the move to the downside. If that's what happens, if price does come up and find resistance at the zone 71/72, then that would actually create a window of opportunity up in this area. But we can't know for sure until price gets there and shows us what, because we don't know that price is going to actually make it up there. So take that off for now, because we don't know what's going to happen next. That's the truth about trading. Nobody does. Okie doke. Good word for the day. Yesterday we talked about trying to be tactful. Being careful of not hurting people's feelings. So today we'll talk about how to help hurting people. Ecclesiastes 10:12. The words of a wise man's mouth win him favor, but the lips of a fool consume him. So here's a question. Are you easily hurt? Do you hurt other people without intending to? Well, 3 things cause this. Number 1, we often speak out of our own hurt. German poet Hermann Hesse wrote, "If you hate a person, you hate something in him that is part of yourself. What isn't part of ourselves doesn't disturb us." It helps to remember that people often lash out in response to what's happening inside of themselves. When you encounter that store clerk that perhaps doesn't give you the sterling, shiny, smiley service that you expect, because this is where you shop and spend your hard-earned money, you got no way of knowing what's going on in that person's life. They could have a loved one, a spouse, a child, in the hospital on their deathbed. They still got to come, stand on their feet, and do an 8-hour shift. And maybe overtime, if that's what the boss requires. We never know what's going on in other people's lives. It's really important to remember that. I used to be the guy, if the clerk didn't behave the way I thought they should, I would just beat a hasty little path. The little man would beat a hasty little path to the store manager. And I'm very ashamed of that. Now, along with gray hair comes a little bit of wisdom. In most cases, or in some cases. Instead, I try to understand that I don't know what this person's dealing with in their life. And so I just silently say a prayer for them. I try to be very polite to them. I thank them for their service, even if their service wasn't maybe what I thought it should be. And sometimes you can see that a person, without going into any detail, hey, what's wrong? Why are you in a bad mood? Just showing that other person a little bit of human kindness for no reason, expecting nothing in return, just being kind, can make a difference. You might see the countenance of their face change a little bit. Their posture might shift. And it may not. So don't get hurt if it doesn't work. Okay? Just be the best you can be. Just don't cause that person more grief, because chances are they're not being nasty or mean or whatever just because that's who they are. There's probably something going on in their life. Number 2, when we're hurting, we get touchy. Let's say you ignore a splinter in your finger and it gets infected. Someone brushes up against it and you howl with pain. You hurt me. However, the real problem is the splinter you neglected to address. Hurting people overreact, over-exaggerate, and overprotect. They also over-influence. Counselors who deal with couples in crisis say that emotionally, one spouse throws up and the other cleans up. Usually, the one with the most pain does the most damage. You know, I don't know how many of you tuned into Elevation Church on Sunday, but Pastor Furtick preached a pretty good sermon, as he does. It's always important to remind ourselves that we're not it. You're not it. You know, we war not against flesh and blood, but against principalities and powers in high places. So there's more at stake than we often forget how much is really at stake. Counselors who deal with couples in crisis. Think about this. It's a little gross, but just think about it. Counselors who deal with couples in crisis say that emotionally one spouse throws up and the other cleans up. The one with the most pain does the most damage. Number 3, getting over hurt takes time. Quick fixes don't work. The kindest thing you can do when someone's hurting is to show them you care. And if they're willing, to help them work through their issues and get beyond the pain, whatever it is. Good things can come from bad situations. A cleaning company working on a sewer line under a city street found 61 diamond rings, numerous vintage coins, and silverware. It was an unpleasant job, but the workers were allowed to keep the valuables they found. You may have to deal with some pretty nasty stuff, but in the process, you may discover some treasures you didn't know existed, and after all your hard work, end up with a great relationship. That clerk who was having a rough day, they know they snipped at you, but the fact that you returned their snip with kindness probably won't be forgotten. The next time you come into that store, that clerk, that cashier, they just might remember. And a relationship is born. Not some deep long-term relationship, but this thing that connects all of us. We're all God's children. We're all one big family. Some of us are lost. Some of us haven't found our way. And as believers, our job is to, what does it say? They will know you by your love. Not because you ran to the manager and ratted him out. And that's our good word for the day. Thanks so much for tuning in. By the way, if you don't have your passport yet, go to eminifuturestrading.com. It's a one-click process. As soon as you get your passport, which is lifetime, there's no fees or dues, no monthly, no nothing. One money, one time, and all of this is yours. 9 out of 10 new traders fail because they don't have a teacher, they don't have a business plan, they don't have a trading plan, they don't have a definable edge, they don't have a mentor, they don't have someone to actually show. If you wanted to be a doctor, an electrician, a plumber, or an airline pilot, you got to go to school and somebody's got to teach you how to do the job. For some reason, trading, we all think we can just, figure it out because it looks so simple. And the barrier to entry, okay, let's see, I can put $3,000 in an account and become a trader, or I can invest the next 10 years of my life and hundreds of thousands of dollars on an education to become a doctor. And traders make more money. Some traders make more money than doctors. I think I'll pick the easy one, right? We all know it turns out not to be so easy, but it can be simple. So, if you're tired of buying trading stuff, everything a trader needs is all right here under one roof. The training, the one-on-one mentoring, the indicators, the strategy, the definable edge, how to write your business plan, how to write your trading plan, everything a trader needs in one spot. If 9 out of 10 fail, simple math tells us that 1 out of 10 succeed. Track down the 1 out of 10 who succeeded and ask them this question. Did you have a teacher? 9 times out of 10, the response will be, well, of course, how else would I learn? Never thought about it like that. Maybe you should. Everything a trader needs. That's the live room every day for 2 hours with a live instructor. You can ask questions. Well, why'd you do that? Why'd you put that trade on? Well, what was your trigger? Well, what do you mean by that? Well, what does that mean? And you get answers. Live interaction, 2 hours a day, every trading day. Unlimited one-on-one mentoring as you need it. Workshop every Thursday night. Around-the-clock support via our Telegram discussion groups. Everything you need, all under one roof. EMiniFuturesTrading.com. You can call Valerie if you have questions at 949-42-EMINI. You can send an email to support@cfrn.net. Thanks so much for tuning in. Cesar, not sure how it's pronounced, but Cesar just posted in the chat box. The market will charge you a lot more money to teach you than a good mentor. That's a very wise saying. I'm going to borrow that. Again, his comment was, the market will charge you a lot more money to teach you than a good mentor. Thanks very much for that comment. And I hope we are that good mentor for you. All right, guys, thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.